Right, just take note that this presentation is purely for educational purposes. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, moving along. No, so sorry. Interesting times, interesting news we had last week, isn't it? Theresa May. Any of you followed the UK election? It was quite hilarious because it was BBC was on the television, the office the whole time, and everybody was quite surprised of the outcome. I mean, it's a classic example of scoring your own goal, isn't it? Calling for the elections and losing it. So, but I mean, interestingly, I mean, the markets pound reacted a bit, but the other markets is fairly muted when it comes to reaction. But we'll see what happens. I think the biggest conclusion that we can draw is that there will be uncertainty, there will be more volatility up ahead, because Brexit might be a question mark after all. After all the talk, after the Article 50, right now Brexit hangs in the balance. So we'll see what happens. But you know, if this year or last year is to prove, the market will do what it wants to do. So try not to predict it in terms of what you think will happen fundamentally. All right. So that's where I come in terms of helping you chart the markets, because I think price action or charting the markets or technical analysis is one, for me, is the leading indicator. Right. Some people say fundy first, followed by technicals. I think technical comes first, followed by fundamentals, especially in the current situation that we're in. Okay. So let me just talk a bit. I'm sure for those of you who attend the webinar a few times, I'm sure you've seen this like gazillion times. But I just want to highlight in terms of trading strategies. So how you analyze the market is one thing. The other thing is how you take your trades. And if you attended my webinar before, or if you attended any of my seminars before, you know that I use a lot of price action, support and resistance to analyze the markets. But once I zoom into what I want to do, whether I'm bullish or bearish, whether I want to long or short, that's where I'll deploy my strategies on how I plan to execute the trade. And I think it's very important for everyone to have some form of strategy or trade plan that you have written out. Okay, written out, whereby, let me see if I got some space here. Wait a moment, yeah. Yep. So I think it's very important for a trader, especially new traders, to sort of like list out or write out specifically their strategies and what it involves. So what I mean is having something like what I have is basically, once I analyze the charts, right, I will look into my strategy book and see what's a relevant strategy. Okay, so I got a strategy on how to take a reversal trade. I got a strategy on how to take a non-volatile trend. Okay, mind the handwriting, it's really hard to write with a mouse. And I got a strategy to take a volatile trend. Okay. So these are all three different strategies that I deploy, but only after I know what I plan to do. Okay, whether I'm long or short, whether I'm bullish or bearish, things like that. Okay. Hold on, yeah. Some of them saying no sound. Sorry about that. Just give me one moment. Let me check. The rest of you can hear me, right? Besides those that replied, how about the rest? If you can hear me, just say something in question box, because I got, yeah, okay, cool. You can hear me now, right, Gary? Okay, perfect. Thanks for responding to that. So, okay, so I'm saying that once you analyze the markets, you know your buyers, you know what you want to do, then that's where you need to deploy your strategies like ammunition. All right, it's the same thing like in the military, whereby once you analyze the landscape, you analyze, you understand the enemy, and then you go back and plan what kind of weapons you need. Okay, so same thing. So in terms of reversals, non-volatile trends and volatile trends, What I have is that in terms of reversals, I might have a strategy to enter called something like false breakout. Okay, I think some of you might have seen this. I mentioned this a couple of times in the webinars. Okay, this might be one strategy. I also might have another strategy whereby I'm looking at a 1, 2, 3 reversal of a key level. Okay, I also have a strategy whereby I simply just buy and sell off key support and resistance levels. Okay, so these are the kind of thing that I deploy. So for non-volatile trend, I might have something called like a momentum kind of breakout. Momentum break. Okay, I also might have something called a pullback, breakout pullback. And for my volatile trend, okay, I might have something called also false breakouts. And I also might have something called pullbacks. Okay, the difference in this and this is that this one is I'm looking for more shallow pullbacks, and this one I'm looking for deeper pullbacks. Something like that, okay? All right, in fact, for volatile trend, I got something called the UK or London session trade as well. Okay, so these are all different strategies that I have in my toolbook. But most importantly, I know what I'm trying to do as well. And it's very important. Okay, before I go on, non-volatile trend means a market that is doing something like a straight kind of very very big pull without any significant pullback. I think if you look like pound cat now, you can see a big drop. That's almost like non-volatile as compared to volatile trend, whereby there's direction, but it's there's a lot of pullbacks and then push up again, pullback, something like that. Okay, and basically, if you have something listed down like that, okay, what it gives you a bit more discipline and a bit more focus, especially when the market's live and you are zeroing in on what you plan to use or deploy, so that you know where you should put your stop loss, where you should put your profit target, where you should you should enter the trade, where you should abandon the trade, and things like that. Okay, so it's good to write it down and put it right in front of you, so that you know what to use in what situation. Okay, but before you go into all these strategies, you need to know the analysis. Are you bullish or bearish? What you plan to do first. That's important. And then you zoom into all this. Okay, by doing this, it actually helps me. I mean, there's a point in time whereby when I'm trading and I always think that all this is in my head. Okay, and whenever I know what I want to do in terms of analysis, I can just pick one of these strategies from my head and try to execute it. But the problem is that, trading, we can get a bit emotionally or there's a lot of emotions involved. And sometimes we can do funny things. We can, the usual stupid things that traders do, like editing the stop loss or not cutting their losses or doubling up or things like that. And it's because we don't have a structure to follow. So writing it down gives you a bit more structure and give you a bit more discipline, which is very, very important in trading. Okay. So I just want to share a bit with you. So especially if you're new to trading, please try to list something down. Okay, you might not have so many strategies that I have listed here, but at least have something written down so they can follow, make it very rule-based, especially when you plan to enter the trade. All right, so let me move on to live markets now. You guys have any questions, please shout out. Okay, so let me go on to the indices first. Let's start with the S&P 500. Okay, now let me zoom out a bit. All right, so look at the S&P 500, right? Still bullish. Okay, still bullish. And the high that we hit was about 2440 or so. Okay, interestingly, this candle, okay, which was Friday, 9 June, last Friday, All right, it tried to break the previous high, but you can see that there's a lot of indecisiveness, and the bulls are unable to close candle above the 2440 level. Okay, it's definitely still bullish. We are still in an uptrend. I know a lot of you are raring to short the market. Mortgage the house, sell everything, and just short the market. But it's still bullish. Okay, it's still bullish. A lot of my clients, a lot of traders I speak to, tried to short at 2400, but the market just pushed higher. So it is what it is. So it's still bullish. Now, if you are planning to look for a trade, okay, this was the region that you could have entered at near the support. Okay, it didn't really come to that level, so you might have missed it. Just delete this. Okay, let me zoom in. Okay, but we are looking at this level here. Just delete some lines. Okay, we're looking at these levels. Okay, these levels, they have resistance, support. Right now, we are in the middle of nowhere. I wouldn't. It's not my cup of tea to try to squeeze a trade or where we are right now. But it might be stuck in this range. Okay, key level to look up for is the 2440 area. Because if the market drifts higher here, okay, there's a chance whereby this resistance gets respected. Alright, and if your guys are aggressive and want to take a punt, okay, there's possibility that you can try to look for shorts here, stop loss above the previous high. Okay, it's very counter trend. It's very counter trend, and you got to be very disciplined when you're counter trend trading, because if it breaks a new high, right, then you need to get out the trade. Obviously, if you put a stop loss above this high, you get triggered. But if it breaks a new high, you need to get out the trade. Okay, if you don't have that discipline, then better not counter trend trade. But this area 2440 is something really interesting. We'll see whether the market can break. You see what happened here in last Friday, whereby the bulls tried to push it higher. Candle closed above 2440, but then there was a big bearish candle, a very big bearish engulfing candle that went back all the way to support. Okay, now if 2440 is unable to break, right, high chance that we might be coming back to the support levels around the 2416 to 2420 level. Alright, so it's really pretty much a bit more range bound for the S&P if we are able to break 2440. That's the key level I'm looking at. Okay, if you look at the 1 hour chart, kind of ugly, not much direction. So I think the 4 hour chart would be a good reference point in terms of how it's moving right now. Okay, that's the S&P for you. Let's go on to the DAX. Okay. Now the DAX is slightly, it's a bit more interesting because even though some of the indices made a push to make new high, the DAX could not break the May high. So you can see very clear kind of double or triple top scenario happening now. We have a bit of a support trend line as well. Okay, so the DAX is reaching a point, the apex of this triangle consolidation pattern. Key level to look up for, similar to the S&P, are the previous highs at around 12870 or so. Alright, key level look up for. Right now the trend is still bullish, but if you notice the MACD, right, you can see that there's a bearish divergence. Okay, bearish divergence, because if you compare the highs, similar highs, but the MACD is making a lower high. So there's a bit, it's not the strongest bearish divergence, but it's still showing that the bullish momentum is waning, even though the trend is bullish. That's the daily chart for you. If you go to the 4 hour chart, you can have a clearer picture. Let me delete some of the lines. Okay, so you can see a very clear picture. Right now, not a keen fan to do anything because we're in the middle of the triangle. But look out for the around the 12870 area, as well as this trend line here around the 12700 area. Okay, for next week or so. this area here, same thing as S&P. I mean, if it's unable to break above, there's a chance that it might drift back downwards, back to the 12700. Okay, and just consolidate. All right, so most of the indices are doing a bit more consolidating. Yeah, I mean, you see the way the indices markets are moving for the past few months, right? Every time it makes a new push, it makes a new high, and then it will consolidate. A lot in that indecisiveness, and then it will take another stimulus to see whether the market can make a push higher or not. Okay, but it's very interesting to see whether there's enough momentum for the market to always push higher again. Okay, if I'm not wrong, this movement here was because of the first round of French election. There was a market gap, and there was more impetus, buying impetus, and bulls just came in to get higher. Okay, but you can see that right now it's consolidating, and the DAX is interesting because it's making a triple top kind of scenario. So it's sideways, I would say. It's sideways to bullish. Okay, but just take note the key resistance level at around the 12870 area. Not sure whether we are able to break that. All right. Okay, BH Tan, you have a question. US tech sold down last 2 days. Is it time to pick up some blue tech stocks or wait for it to break the last top? Okay, Mr. Tan, if you're talking about specific stocks, then I'd rather look at the chart of specific stocks. The way I trade is that I don't really, if I trade stocks, I don't really, I will look at the specific chart and then plan according to it. But if you want to talk about US tech, right, NASDAQ, let's go to NASDAQ. Okay, so if you see NASDAQ, right, sorry, where did I click? Yep. So if you look at NASDAQ, let me zoom out for you. It is still bullish, isn't it? It's still bullish. You can see that there's a bit of a trendline support here and things like that. But it's still bullish. Okay, this is a longer term chart. Just delete this line now. Okay, so it's still supported at around the around the 5680 level. Still supported. But if you look at the 4-hour chart, it paints a slightly different story. So the key thing for me for NASDAQ is around this level. The 575, around the 5740, 5750 level. Okay, the reason why I say that is this. What I anticipate is the market will most probably react off here and come down, maybe back to this support level here. Then we can see whether the bears will take over to push it to break all these previous support levels, or whether the market will start drifting back upwards. Okay, these two lines that I draw between the 5740 and 5750 is a key resistance for the next 1-2 weeks, because if it breaks above, then we might attack the previous highs here again. Okay, but right now the 4-hour chart is looking bearish. I'm more inclined to think that the market might come back down to test the support at around the 5680 again. Okay, so if in terms of buying, if you're talking about specific tech stocks, if you have any names that you like, please throw it to me and I'll try to analyze it for you. But I'm just looking at NASDAQ as a whole. In shorter term, is looking a bit more bearish. Okay, I'm more inclined to think that it's going to come down to test the previous low at 5680. But if you look at the daily longer term chart, right, the uptrend to me is still intact. So that's why the resistance level that I mentioned is quite important to give me a better understanding what the NASDAQ is trying to do. All right, Mr. Tan? Fang stock. Okay. Are you talking about Diamondback Energy? Diamondback Energy, right? FANGS. I'm just typing the ticker. Okay, I'll tell you what. I'll cover any other markets because normally I cover indices and FX and a bit of commodities and stocks at the end. So I'll cover stocks at the Facebook. Okay, I'll cover Facebook at the last part of the webinar. Okay, let me just cover the usual things first, like indices and FX. All right. So that's Nasdaq for you. Any other indices that you guys have in mind, please shout out. So this is the DAX. Let me move on to Asia right now. Let's talk a bit about the Nikkei. Nikkei. Okay. Right, similar to the other indices, still in the uptrend, but this is a more significant bearish divergence on the MACD. See this? Lower high here, higher high here. Okay, so it's still on the uptrend now. Let's go to the 4-hour chart. Okay, 4-hour chart, you can see that it's supported by this trend line. Okay, now this level here, this swing here where it broke through, right? If you go back to the daily chart, this is a potential false break. Remember I told you what a false break constitutes in terms of how to look out for it a couple of webinars back. Okay, so a false break is a situation whereby this is you know that there's key resistance here. The market is pushing higher, it breaks out. Normally, and normally almost immediately it will come back down, retest this level again, the resistance, and then drop. So this is called a false breakout. Right? If you look at the charts, this is a daily chart, you can see that the market did break above. In fact, the candle closed above the resistance level, so it looks bullish. Okay, but we have soon after broken back below the key level, and this is a key level to me because it's 20,000. Okay, I'm not the only one who can see this. 20,000 is a key resistance level because it's a whole number as well. So what will confirm that it's a false break if this 20,000 gets reacted and the market starts dropping from there. Okay, then I can roughly say that this is probably a false break area and the market is coming back down to a key support level, maybe back to 19,500 or 19,600. Okay, so if you go back to the 4-hour chart, you can see that, okay, this level, this whole level here on daily chart is just a shadow. Okay, so for me, 20,000 is key. If we respect 20,000 resistance level, okay, there is a chance that you might drop back to 19.8 or even back to a key support around 19.6 or so. Right now, I will call the Nikkei a bit more consolidation already. Okay, so just take note of this little level at around 20,000 for Nikkei. Okay, let's go to one of the more bullish index out there is the China side of things. So if you look at this China 850 chart, okay, very nice. So I can find some resistance. Okay. Okay, the resistance is anywhere close to around 11,450. There's still legs to run. Okay. So you can see that the momentum is definitely bullish. High, low, high, low, high, and then high, low. Okay. So definitely bullish. So if you go to the 4-hour chart, you can see that anywhere between here to here is support. Okay, anywhere between the 11,120 to 11,170 or so is support. And it's a high probability setup whereby the markets might make a push one more time, at least back to the previous high here. So pay keen attention to the support levels around here. There's a chance that it might move up, at least back to the previous high, if not breaking new highs. Okay, that's China 850. But the daily still looks bullish. Let's go to the 1 hour and have a look. Okay, 1 hour is a bit more consolidating. But you see this, see these two lines I drew on the daily chart? We are nearing the support zone. Okay, so if you take a long from there, your first target will most probably be the previous high also. Yep. Okay, so that's the China 850. Yes, Mr. I'll take a look at the dollar index once I start on FX. Yeah, let me cover one or two more indices, then I'll move on to FX. I'll start with dollar index. Thanks for asking. Okay, so this China 850, let's go Hang Seng now. Yep. So if you look at the Hang Seng, one thing you can notice very interesting is that yeah, it's definitely an uptrend. Okay, definitely an uptrend. But if you look at the pattern, right, it's very interesting, isn't it? Because, all right, if you look at the way it consolidated, one big red candle, and then the bull just took over. So this might be a similar scenario. We'll see. But it looks very similar. Okay, but the daily definitely still on the uptrend. Let's go to the 4-hour chart and have a look. Okay, now the 4-hour chart is not as bullish as the daily, obviously. Okay, we have made a drop from the 2600 all the way to support at around 25700. This level here, this circle I drew and this line around the 25720 area, I'll say it is a strong support level. Okay, the shorter term resistance level would be anywhere near the 25900 level, which is where we are right now. Yeah, I would not rule out if the market is going to do some form of consolidation around here. Right now, I can't decipher what kind of chart pattern, but it might be consolidating. Okay, if you go to the 1-hour chart, just adjust this line a bit. Okay, so if you go on the chart, you can see that we are approaching that key resistance level at around 25900. Zoom out. Okay, so the key battle will be the 25900 area to see whether the bulls can break back above it, because if it's unable to do so, then most probably we're drifting back downwards somewhere around here, and then most probably we'll be consolidating sideways in a bigger scheme of things. Okay, so this level around the 25900 level is quite key. We are at that level now. Okay, interesting thing to see is whether the bears can get its momentum from last week to push it back down to support level at around 25700. Okay, but if it clearly breaks, then I'm not surprised if it tests the previous high around the 2600 again. Alright, so just take note of Hang Seng.